All right, good morning, ladies and gentlemen. Today is September 4th, 2024, and we are in the fall, the autumn, and so it's been a wild market. We had the Labor Day weekend and everything was seemed to be going pretty well, but under the surface now there's been some little cracks under the surface in the market. And then yesterday, boy, things really got interesting. We had a significant sell-off in the indexes, but the funny thing is that as we're about to see here, the S&P 500 just barely off of the highs. I mean, but yesterday was what, a couple of percent down, and even more in the Nasdaq, and so we're kind of in an interesting spot here. The main thing that I wanted to look at here is this sort of double top pattern here in the S&P, right? So any number of things can happen from where we are now. If you look back here, when the market had this run up and sell off, if I draw a horizontal line at the same sort of spot as here, you can see that when it ran up to the overhead resistance after a little bit of a sell-off, it managed to break through and then kind of pull back in and continue on, right? So, but this is a little bit different of an animal, so to speak. It's kind of it's kind of more double toppy looking. This was an interesting sort of medium, I would say like medium term pullback, right? It lasted about a month, and then the market kind of ran straight back up to it and broke out and consolidated right around the highs. And so I would expect something similar. A couple of days ago, prior to yesterday and the holiday weekend, I was honestly kind of expecting that maybe the market would try and break out of here a little bit, maybe poke through it and then pull back in, similar to what it did here, because that's usually what happens around these all-time highs. But if we look at the Nasdaq, it's a whole different sort of ball game. That's the This is not nearly, well, and of course this is the Nasdaq 100, but this is a kind of a different picture, right? Because we had that sort of V bottom, real big quick sell-off, and that sort of V bottom, but we never actually, well, I should say the market never actually got anywhere near the prior high. So now, and of course, it's the Nasdaq that everybody's getting excited about. And of course, in a minute here, we'll take a look at the stocks that everyone's talking about. So Nasdaq's not nearly as good of a picture here, and I mean it's trying to. It was trying to. This was actually kind of like a bull flag looking type consolidation prior to yesterday. And so the interesting thing is that, and I saw this morning on CNBC. I mentioned last week I don't really watch it, but I have it on. The interesting thing is that, fears of an economic slowdown is what the Wall Street Journal attributed yesterday's significant sell-off on. And it was funny because I was looking around and there was really kind of no one thing that no one sort of factor caused the sell-off. It wasn't like, some breaking news thing that caused the sell-off. It was more like everyone was kind of wondering. Now, here's the thing. We all know, or we should know, that September is historically a weak month. It's actually the weakest month of the year. And everybody thinks that, October is when the markets crashed in the past, but September is actually historically the weak month. And I think I saw yesterday that the back end of September is historically weak. So is historically the weakest time of the year. So anyway, everybody kind of, even Tom Lee expects a sell-off. So this is sort of interesting because that was a really big move in the Nasdaq 100, and a lot of, obviously, if you watch the markets, you've heard that Nvidia is like the stock that everybody's talking about, right? And they talk about the market cap. I did see something interesting about Nvidia. It's got the world record for the largest market cap won and lost in a single day, right? Because it's such a, such a behemoth. So we got the same sort of thing here. I mean, theoretically, this is not really a pretty chart in theory. I mean, you can draw a lot of lines on here. Actually, I should have switched to my candlestick chart because I have been using candlestick charts a little bit more when I look at these, but this is still viable. Like the trend lines can be drawn different ways, but there's quite a bit of support coming up right here on quite a bit of support. Let me draw that on the chart here. Well, there's a gap for one thing. So there's the gap right there. Yeah, see that? It extends from back over here, March and April, and then there was that gap right there. What's interesting about that is, looking at this chart right here from March to May, it was setting up for, a perfect breakout. I mean, that was just absolutely picture perfect. Textbook technical analysis, good looking chart right there. And so it was setting up good, and of course, what did it do? It gapped right over where everybody wanted to get in, and then had that that outside reversal bar, the big red, it would be a bearish engulfing candle if I had my candlestick chart up, but yeah, those typically, signal the end of a run. And so he had this big run and, and then a lower high and the big sell off and another lower high. And so that should be a little bit concerning. Um, the thing about this stock is it's really kind of, I won't say overhyped, but it is in some way. So here's the most interesting thing is that I saw this last night when I was perusing my normal avenues. So right, after the bell last night, I think that the DOJ is investigating Nvidia because for antitrust concerns, which seems ridiculous, but antitrust concerns. But somebody had mentioned that back in the year after the dot-com bubble, back in like 2000, that's when they opened an antitrust investigation on Microsoft, and that was potentially the catalyst that caused the peak in what they call the dot-com bubble. So I thought that was pretty interesting because it's just, history doesn't always rhyme or repeat, but it rhymes a lot of times. So that's kind of interesting. But of course, there's probably I would surmise that there's dip buyers lined up around the block to get Nvidia pretty cheap. I mean, it's come down quite a bit if you think about it. I mean, it didn't spend very long up here at 140, but if you think about it, it's down significantly from the high, and there's what you call accumulators, right? Stocks like this, especially this one in particular, which seems to be, a huge driver of the market. There's institutions and individuals that basically, kind of continually want to accumulate this. And so when they see, a dip like we just had, I mean, look at it today, gap down and now it's sort of pushing higher, but they're looking to accumulate stocks like this over longer periods of time. And interestingly enough, a lot of people probably feel like they missed the boat on this. Look, it's actually pushing higher from yesterday's high, so that's kind of interesting. But anyway, I was looking at, let me close this. I was looking at a bunch of semiconductors, right? Because if you'll notice, my chart starts at the beginning of the year here. And I don't actually have any moving averages on this particular chart. I did that on purpose because I was going through the charts this morning and I switched up a couple of my charts, put some moving averages on them, looked through a candlestick chart, but I added the VIX to my watch list here. And of course, the VIX is something that is probably one of the more important things in the market because rumor is that the VIX actually sort of drives the market, right? And what was most notable was that VIX was up like 38% yesterday, right? And so it's kind of weird, this whole thing where the market tanks and then everyone's looking for a reason why, and of course there's more than enough reasons out there why the market could sell off. But anyway, the VIX kind of tells a story. And this right here, I mean, you guys remember this. This was not very long ago. This was, you know, when everyone freaked out because of the yen carry trade unwind and that I mean that was kind of like a warning shot across the bow, and then the speed at which they were able to push it back down, at which they sold the VIX. The thing about the VIX is that and I think a long time ago, well, a long time ago, I actually made a yearly chart of the VIX, which basically shows that, I mean, no matter what happens with the VIX as far as spikes, it never holds. Like, no matter how volatile the market gets, eventually it settles back down. But this was just, I mean, this was an historic event. And generally, when you see a spike like that, it means everything's not fine. And so it was incredibly surprising to see it sort of settle down that quickly. And then they pushed it back into this range here, and everything was fine. But I don't know. I mean, this sort of pattern here and this. See, the problem is that obviously derivatives. I mean, we're in kind of a dysfunctional environment, right? Despite what you may hear on TV and that, valuations, I believe, valuations are stretched, right? The overall market valuations are not necessarily, well, if here's the thing is if there's an economic slowdown, I'm not going to get into this whole thing with the, yield curves and bonds and all this different stuff, but suffice it to say that there's so much leverage in the system, and especially with the VIX, right? So I read something about yesterday that when the VIX starts spiking, people start panicking because of all the derivatives tied to the VIX, and they have to the market makers have to sell futures in order to keep their book flat. So, but anyway, enough about that. So we can see the VIX gapped up this morning. It's come back down, but it's still in the 20s, which means the volatility is elevated, and this market's kind of making me a little bit nervous here. Let's look at some of the biggies here. Well, primarily because of the semiconductors, which have been the leader, are starting to look pretty rough. And so it's going to be interesting. There was a lot of talk about that yesterday. There's some other sectors that are doing very well. Healthcare, I think, is up at a high, and utilities, and I mean, there's the financials are doing pretty good. Weird stuff like real estate, something you'd never really think about. Consumer staples. I mean, a lot of the big spider sectors are actually doing pretty good. But typically, the first cracks in the market appear in the generals, right? And so Apple's got kind of not a really great looking pattern here either. There's my trend line. I mean, I'm not knocking anything. The thing about technical analysis is obviously we want to look at everything sort of objectively, right? That's the whole point of technical analysis, is that we're looking at everything objectively. And so there you go. Looking at Apple objectively, and this is by no means, there's nothing about this that you really see in a technical analysis textbook as far as this pattern we're in now. I mean, this is sloppy. And this makes me nervous. It really does. Just because, for a period of time, the price looks well behaved, and then for whatever reason, and honestly, I don't really remember much about the story this day, but I got to tell you that gap down there, and that could have very well been earnings. Um, but whenever you see this type of fast and loose and wild sort of price behavior, it's got to make you a little bit nervous. So I'm not even sure where to draw an uptrend line on this thing. Um, and so, it's selling down today, which is kind of a little bit sort of unusual because the market itself has rallied up. Last night the futures were down significantly after hours, and they managed to rebound. I think Japan was down like 4%. Um, we've talked about Tesla on this show a few times. I got to tell you, the chart is kind of constructive looking to me right now, and the reason is you got this beautiful pivot low right here. And so I keep an eye on this one. Zoomed in on the very short term here, you got a really nice sort of bull flag right there, and then you have this perfect pivot low, right? And so quite frankly, from a very, very near term perspective, whoops, I didn't mean to move that. I meant over yesterday's high, Tesla looks like it could get something going. Tesla with a stop right there under that pivot low. So this is a pretty constructive looking chart, quite honestly. And of course, this particular trend line here could be I've been thinking, well, I shouldn't say this out loud, but I've been thinking lately. I was watching a good friend of mine go through some charts, and those of you that have been watching this show for a long period of time, like the last 10 years or whatever, remember that we were using free stock charts. I was using free stock charts for years and years and years, and it was absolutely the best software for just marking up charts on the fly and zipping through, and everything about it was ideal, and I was a master at it. And and of course it was built in something called Microsoft Silverlight, which no longer is supported, so they had to ditch it. But long story short, it was made by the company that does TC2000. And so I was thinking to myself, well, geez, should I take the plunge and switch to TC2000, because it's about the closest thing to it's basically was the free stock charts, only it's the paid version. So I might think about that. I'm getting a little better with these, but they're still quirky. I do like this is the stock charts ACP, which I like way better than just the regular old stock charts, right? The regular old stock charts it reminds you of charting in the 90s. Anyway, long story short, Tesla's got a pretty nice pattern here, and so it's definitely worth watching, but off of that pivot low right there, that's sort of the main thing that I would look at with this. Other than that, obviously I have no idea what it's actually going to do, but off of that pivot low, it looks pretty good. Did we look at AMD yet? I think AMD looks pretty nasty, to be honest with you. And the funny thing is, prior to there we go. Long-term chart. This was a beauty, but I'm seeing a lot of charts that basically they look they look like this. They look nasty now, and you can go back and say, wow, there was some great opportunity to take some off the table, but you definitely, at this point here, this is another chart that, technically speaking, it looks kind of broken. Obviously, from a short-term perspective, there's obviously potential for it to, to rally up. It's kind of oversold or whatever. And so, same sort of thing. Just this little near-term pattern here. trot across those highs. You see this all the time. It's kind of, it was kind of in like a little bull flag, and then it broke down, and then you can see patterns like this where it'll rally back up into overhead resistance, but this is not a pretty chart from a longer term perspective. I mean, first of all, you got major overhead resistance up there, and as far as support, I suppose that you could say it came down and it actually tested that support from way back. That sort of break. Well, see, that's what I was saying about these charts. They're just quirky. So you had that really nice breakout there, and then this run up. So parabolic run up like that is usually a red flag. That's when people get really excited and they make a lot of money real quick, and so you get this parabolic run up, and then this is about. I talk about textbook technical analysis. That's about as textbook of a blow off top parabolic reversal bars you'll ever see. And so whenever, if you're ever holding a stock and you see something like that, everybody else is getting excited, and it's probably, these are the days where they talk about it incessantly on CNBC, and so that's a good day to cash out, sell half of it, bail out, wait for a better opportunity. But yeah, this is a pretty nasty looking chart, I'll be honest with you. The 150 level right here is that's sort of, major overhead resistance too. You got a lot of, you're below that basically. Basically going back, you'd want to be above that. So some of the other semiconductors look pretty rough too. This arm, right? There was an IPO there. And IPO didn't really do a whole lot, and then just blasted off. This was earnings right here. Just blasted off when they had their their earnings release, and then you can see where it's sold down. It didn't quite close the gap there, but this has been, another powerful stock. Anyway, as you look around the semiconductor stocks, look at that, Micron, looking really sort of suspect here. So here's something that I see this all the time. The SOXL, this is actually very instructive, because what's instructive about this is, this is triple long, 3 times long leveraged the semiconductor index, the SMH. And so this is about the best demonstration you'll ever see about what just happened to my oh, there it is. It like disappeared. What I was trying to show here was the idea, look where it is now, right around $30. And so you can see, back last year, before the semiconductors really all, blasted off and took that more, recent leg up. But you can see what the triple leverage does to you on the way down. I mean, it all evaporated, right? So, I mean, if you were to look through all the semiconductors, well, let's just look at SMH real quick, because that's what this is based off. So you go back to December, and this was the spot that I had marked on that previous chart there. December, basically December of last year, I think it was. It might have been there, but so you can see that. This is still up fairly significantly, while the leveraged long is down. And of course, we all know about that. Years and years ago, and I'm talking like a decade ago, when they started introducing these leveraged ETFs into the market, a lot of people got excited, myself included, because, at the time we were basically long only sort of, ETF and stock traders, and they provided a really super simple way to short the market. But what everybody came to find out is, besides the fees associated with them, that since the leveraged ETFs are rebalanced on a daily basis, they inherently have decay that's just incredibly terrible for the average investor. Now, I mean, if you understand them and you're day trading them, or a day or two, something like that, but if you think that if you think that something's going to go up or down significantly and you want to participate in that, the leveraged ETFs are typically not the way to do it. So, which brings me to, since we're talking about it here, I just wanted to look at I want to look and see what the triple long the S&P looks like. So, well, there you go. I suppose kind of in the near term, this is an example of what I was talking about. So that daily rebalancing of leverage, there's the decay. Like the difference between these highs being up here against the old highs. So, but there's the SPX, or the, what am I trying to say here? SPX short. Yeah, I mean, well, you get an idea when you go to like a monthly chart. See, this is, and so here you go. They introduced these things, interestingly enough, right back in 2008, which seems crazy, but I hadn't even remembered that. I didn't remember what year it was. Let's see what year. Oh wow. Yeah, okay, so the triple long the semiconductors. This is pretty interesting. Wow, this is a monthly chart. Man, look at that. Holy cow. Talk about volatility. From 10 to 70 and back to 10 and back to 70 and now down at 30 there. So it'll be interesting to see. It'll be interesting to see what what happens. Let me go back to a daily chart here. What happened? And then of course, the semiconductors. What happens with the semiconductors? Because that's the hot sector. This is an ugly looking chart. There's no easy way to put that. And of course, at certain times it's beautiful. It's been a beautiful, beautiful chart, right? When it was having this uptrend here, and then this was kind of a parabolic sort of uptrend there. I don't like parabolic run-ups. This was actually a pretty well defined, and obviously, look how long this went on. This is a very well defined and relatively orderly uptrend. There's some other things you can look at on this chart, right? Had a run up, it pulled away from sort of the primary trend and went sideways, took a winger, and then basically rebuilt the uptrend. But this gap down right here in July sort of kicked off. I'm looking at the chart for like other significant gap downs, and you don't really see them on there. Like from November of last year all the way up until the peak there, what you were seeing was more gap ups than anything. You were seeing gap ups, right? Lots, and especially over here, you were seeing lots of gap ups. And so that first significant gap down was really sort of I like to say, the shot across the bow, because it still stands. That's where it sort of broke down from. And the other thing, I'm not going to draw like fibs on here or anything crazy like that. And then you get into the whole thing about when you get a gap open like that. If I was going to draw a fib on here, and this could, people have different interpretations of how to do that, but do you use that open? Like if I change this to a candlestick, right? Would you use that open, or would you use, these lows here, this congestion to, and basically what I'm trying to point out is that you had roughly a 50% retrace of that big sell-off there, right? So it managed to bounce about 50% and then failed. And so yesterday was huge. Yesterday was a huge sort of scare. And like I said, Japan was down 4% last night. And so, right now they're trying to, the dip buyers are stepping in. Let's look at this symbol. Well, this is a symbol I've been familiar with for a long time, but this is the Vanguard S&P ETF here. Super low fees, that type of thing. The kind of thing you dollar cost average into for, forever. um, and so, it's holding on pretty well, right? I mean, the S&P is just barely off the highs. This sort of V reversal here is actually uncharacteristic. I mean, back in the old days, we would see V reversals a lot of times, and you'd see individual stocks with the V reversals. But what we've witnessed lately is sort of uncharacteristic of what we've seen recently. And so while everyone was making a huge big deal out of yesterday, right? I mean, it was the same sort of thing back here in early August, right? We're getting these big sell downs and extreme volatility, and so anyway, it's just a little bit more of that. The volatility and the ranges are just picking up a little bit. Nothing to get extremely concerned about. Real quick, look at IWM. IWM's kind of, well, there's a whole bunch of support coming right up here. Whole bunch of support right in this area here. Well, I have to click. That's what I'm getting used to on these charts. Yeah, so I mean IWM, it's kind of an interesting chart here because there we go. Let's zoom back out there. There's a bunch of support, but yeah, the longer term chart of this, and you guys know I've looked at this and I got stuff drawn all over it, but this is kind of an interesting spot because while the other markets were making new all-time highs, you go back and you realize that IWM is basically trading in that same range. Let me find my other chart here. I've got it marked up much better on this chart here. There we go. That's the one I was looking for. So it's crazy to see that, this was basically the 2021 range, and here we are 3 years later, just right smack in the middle of this exact same range, with the similar looking sort of zigzag pattern, right? So IWM likes to be range bound. Look at this. You go all the way. There's the pandemic sell-off, way back in time. And what's interesting about what's transpired over, I could do a whole show about what's transpired in IWM since the pandemic sell-off, but look at how it respected that's those support levels, and we talked about that at the time. We talked about these support levels, and so it tends to vacillate in between support and resistance, like in a channel, and then occasionally it moves out of the channel, and then it finds other levels and then vacillates in those levels for extremely long periods of time. So right now it's like smack in the middle of no man's land, and unfortunately, in the old days, it was the small cap stocks that drove things. That's where you'd figure out whether the market was, whether it was like really a bull market and what the animal spirits looked like, and how likely, and I'm talking 10 years ago, we used to primarily look at the IWM because it was 2,000 smaller stocks and it gave you a little bit better look of the overall picture. Now it's almost, well, they talk about the three major indexes, and the Russell's not one of them. So I don't know what to make of it. But the idea that something could, an index with 2,000 stocks in it could be trading at the same level it was, 3-4 years ago, is not really, it just means things have changed, right? So somewhere out there's one of those Mag 7 ETFs. I guess I need to figure out, or not figure out, I just need to look up and see what the symbol is and add it to my thing, because that's kind of interesting. Because real quick before I wrap this up, last thing is just look at Microsoft. I got a 50-day moving average on here, right? So if you look at, you look at the past couple of times that Microsoft dipped below the 50 and then recovered back above it. So obviously back over here, brief dip here, but this is looking it's looking a little bit rough right now, right? I mean, not only does this look like sort of a head and shoulders pattern, you got a ton of overhead resistance here, and of course, Microsoft is probably, I mean, people talk about Apple well, talk about it. I mean, Nvidia, you got Nvidia and Apple and all these Mag 7 stocks and this and that, but Microsoft is probably more important to the market than any other company, sort of in a broad perspective, I would say. And so this is, if you didn't know what this was, I mean, obviously Microsoft, great company, this and that. Well, depending on who you talk to, but a lot of criticism of Microsoft. But then again, they are they did create the software that I've been using since 1995. So, but anyway, this purely objectively, if you didn't know what this was, you'd look at this and say, "Wow, this is a pretty ugly looking pattern." So it's going to be interesting to see what happens here with Microsoft. The last thing I want to point out that I forgot while we were looking through these charts is, well, oh, the quirks of the free stock charts is, look down here, this MACD. That's what I wanted to point out, was the fact that this MACD, as we speak today, even though we got a little gap down and push up, but since since this sort of retest of the all-time highs, the MACD has been kind of coming down, and it's going negative. And that doesn't necessarily mean a whole lot, but look back over here. Watch my cursor back here. Look at the MACD right here. Big red candle down, right? I mean, if I was looking for a similar sort of setup on the chart, what I would see is this big, red bearish engulfing candle, and then the next couple of days the market kind of bounced back up inside that candle. But that was the point there where the MACD was sort of going negative, and prior to that it had been really flat. So this is a little bit different here, right? You had the big V rally, which is losing momentum, and then this is sort of going negative. So I mean, the rest of this week, we could bounce back in and from being oversold in the very short term, but and the fact that it's right on the 50-day moving average. But anyway, keep an eye on that MACD. The MACD histogram is one of my favorite sort of things. You'll see them on a lot of my charts, and I mean, here's the thing: is if the market bounces today and into the rest of the week, right? Remember, this is a holiday shortened week, so you get something similar to this. You get a big scare day that looks like technically looks like the market's going to sell off from there. And then what happens is you get a few days of retrace back into it, and everybody gets complacent and thinks, oh, well, that was just a one-day anomaly. And it's not. You get a rollover and a further sell-off. So whatever happens next week is going to be extremely important. And so a week from today, we're going to take a look at that and see if it resembles this or what actually transpired. So anyway, thanks for tuning in. I'll see you back same time, same place next week.